Cool, you guys are live. Good morning. Morning, Tsecho. Morning, Julie and Lolo.
Good
Morning,
morning.
Tove.
How many brokers do we have? 364. You guys are coming in numbers. We're so happy to have you guys, our dedicated fans, the people that keep iTOOsday going. We are just going to hold on for a few minutes so that we can get everyone in the room before we jump into this very interesting topic. I wish we had that, call centers when you're waiting in line. Do, 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 do. Just for the session.
We should record an iTunes song.
Nah.
Julie, at iToo, we've got a band, an internal band. It's called the iTunes, and Tsecho is one of the exclusive members of that band. So
one of the lead
she's
singers.
asking, yeah, she's one of the lead singers, and seeing as she's suggesting jingles as people wait for the start of the iToosday, I think she should keep us entertained.
Oh, really?
That's amazing.
They really are quite cool. They've actually so what is your role in the iTunes?
My role in iTunes is lead singer, which is really the only thing I have going for me because I cannot play instruments no matter how hard I try. I wish.
I see we've got some comments on the chat. Good morning to everybody that's joined us. Welcome. I'm going to turn off my mic now, Tsecho and Lolo. Let me not interfere with your guys' stuff. All the best.
Thanks, T.
Good morning to all 579 of you. We are so happy to have you back for another installment of iTOOsday, the series that never stops. Today, we're going to be speaking about something very topical, which is the VAT hike. Some very scary changes. I remember a time back in my day when it was 14%. Now we're moving up. So to contextualize, in 2018, VAT vendors faced several complications when the rate was last amended. This included hard coding VAT rates in system and challenges, updating multiple systems across large organizations. The upcoming VAT rate, excuse me, the upcoming VAT rate change is a tongue twister. And it's changing to 15.5% effective 1 May 2025. It will require businesses to adjust tax invoices, credit notes, and financial systems, while also considering transitional rules and rate-specific regulations, particularly for connected transactions, fixed property, and installment sale agreements. Joining us today, we have two absolute experts. We have Matlhogonolo Zulu, who is the CFO of iToo Special Risks. Welcome, Lolo. As well as Julie Parker, a Senior Associate Director at Deloitte. Ladies, I don't want to take too much of your time, so Lolo, you can kick it off. Thanks, guys.
Thanks, Tsecho, and welcome, everybody. So we've invited Julie Parker to assist us in gearing up for the upcoming changes. And as Tsecho has already mentioned, Julie is an Associate Director in Direct Tax at Deloitte. She joined Deloitte in Direct Tax in 2002, specializing in VAT across a range of industries, including financial services, retail, and manufacturing. However, Julie's work does expand to due diligence, assisting with and obtaining tax directives from SARS, liaising with SARS regarding any VAT disputes or objections against assessments raised by SARS. So if you guys have any interest and penalties you'd like to SARS to waiver for you, you can holler at Julie. And over to you, Julie. Thank you for being with us this morning.
Thank you for the introduction and hello to everybody. Yeah, very topical subject today. I think interestingly, and something that Lolo asked me to mention, is that it actually hasn't been accepted yet. So legislation hasn't been passed, but there is a section in the VAT Act that deals with the fact that the legislation hasn't been passed. And it essentially says that if the Minister of Finance has mentioned the VAT increase in the budget speech, that increase will prevail for a period of 12 months, subject to legislation being passed by Parliament. So it's our view that it's going ahead. The 15.5% is going ahead, and even if it doesn't get passed in Parliament, or by, I think everyone's waiting for the 2nd of April, it's going to prevail for a period of 12 months. I didn't make a formal presentation. I just sort of made some notes, and hopefully it will be interactive. I know you can't speak, but please enter your questions into the Q&A, and we'll go through those as and when we go along. Share. Right. So some things to do, in terms of this rate increase, communications to clients, and internal communication within the business, I think, is important, particularly where the contracts may refer to 15% as opposed to 15.5%. In some cases, the contracts refer to the standard rate, which is great because then you don't have to change anything. But I think it's important to issue these communications to clients of the rate change, and internal communication so that accounts receivable and procurement and accounts payable understand what the changes mean. So that was just some initial things that I think is important for businesses to do. Then system changes. I mean, it's complicated depending on how complicated your systems are and how many subsystems you have. Obviously, in the banking environment, it can be very complicated because they've got legacy systems and many subsystems. Some businesses will choose to have a GL set up for 15% VAT and a GL set up for 15.5% VAT for both income and expenses. So that's also something to think about, so that you know which income you've received at 15.5 and which income you've received at 15, because there are transitional rules that apply, which we'll go through. So accounts payable and procurement, because of the transitional rules, you will receive supplier invoices at the old rate for some many months to come. And we'll go through the transitional rules now, but it could be a period of 6 months that you could receive invoices at the old rate. And it's important that accounts payable is able to note and claim the correct amount of that and not overclaim. Accounts receivable, again, the transitional rules become important, and training the users how to use the system in terms of the old rates and the new rates. Again, I don't know what everyone's system they use, but many businesses have VAT codes, so they'll have a VAT code for standard rate, a VAT code for the zero rate, and similarly for accounts payable, VAT code for expenses you can't claim, VAT code for expenses you can, and if you're subject to apportionment, a VAT code for apportionment. So consider setting up new VAT codes in the system. And again, if you don't do separate GLs, the VAT codes will at least tell you which transactions are effected at the old rate and the new rate. Just pausing if there's any questions. I don't think I can see.
I will read out the questions as they come along, Julie.
Okay. So moving on to documentation, I mean, obviously the tax invoices, credit notes, debit notes, the new setup in the system must be done. In terms of credit notes, if you ever issue a credit note, even months and months after the VAT rate change, it must reflect the rate at which the original tax invoice reflected. So if the original tax invoice was at 15%, the credit note must be at 15%, and so on. Debit notes, you're increasing the value, so the debit note will be subject to the special transitional rules. So, for example, if the service was delivered prior to the effective date, the debit notes will reflect the old rate. If it's increasing a price for services delivered after the effective date, it should reflect the new rate. So that's quite an important one on credit notes. So your system will have to track which rate. Well, I mean, a credit note has to refer to the tax invoice that it's crediting. So that's a requirement, but it's important to make sure that the credit note reflects the rate that the original tax invoice reflected. Bad debts and bad debts recoveries. Again, if you're going to write off a bad debt, it must be written off at the VAT rate that it was originally posted. And similarly with bad debt recoveries. So if it was at the old rate, you'll pay output tax on the recovery at the old rate. And if it was at the new rate, at the new rate. So when you're writing off debts, you would have to track which rate that debt, so that income attracted in the first place, and then similarly claim the VAT based on the same rate. And then if you happen to recover that, you need to keep track of which rate the original transaction attracted VAT. Still no questions?
Still no questions, not yet.
Okay, so the time of supply. So the time of supply, the general time of supply is easy. It's the earlier of when an invoice is issued or a payment is received. And this general time of supply rule will still apply to the new VAT rate unless a special time of supply rule applies. Okay, and how I think of it is arrears versus advance payments. So if we talk about arrears, so for example, if a premium is received in May, but it is for cover in April, the old rate will apply because the service was delivered in April. If you receive a premium in May for cover for May, the new rate will apply. So that's the way I think of it. So any goods or services delivered prior to the effective date and invoiced after the effective date, the old rate will apply. Any goods or services delivered after the effective date and invoiced after the effective date, the new rate will apply. Now, there obviously will be some services that span the transition. So, I mean, what we do is quite a good example. So we will have engagements in place and we will start the work in April and maybe only finish it in June. So when we invoice for that, because it spans the transition, the law says that you need to make a reasonable apportionment. So some of the services would have been delivered before the effective date, would be invoiced at the old rate, and the services delivered after the effective date at the new rate. So that you actually have to apportion your invoices. And that's why I was saying you will receive invoices from suppliers at the old rate for a number of months still to come.
Julie, we do have a question from Nolene. The question says, with respect to an increase policy, does the VAT increase at the renewal date of a policy or invoice date? With respect to an insurance policy, does the VAT increase at the renewal date of a policy or invoice date? For example, say you invoice a week before 1 May 2025 for a policy renewing on 1 May, what applies?
And is it an arrears or an advance invoice?
It's an advance because the policy policy renews on the 1st of May, going from 2025. It will run from 1 May 2025 to 30 April 2026.
So the new rate will apply because that relates to services delivered. No, wait, hang on. So she's invoiced it before May.
Yes. But the policy inception is 1 May.
So that if it's invoiced in April, it will be at the old rate.
Okay. So even
Yeah.
if the services will be provided from 1 May.
Because then the normal time of supply rule applies.
Okay, thank you.
So it will be at the old rate. Yeah.
And then the next question that we have here from Jean, from a claims perspective, would be whether the Section 8.8 indemnity tax needs to be amended to 15.5 and also the effective date, which he says he's assuming would be 1 May 2025.
Okay, I just need to check what 8.8 says, which I can on the SARS website, because I don't know, does it refer to the standard rate?
Lolo, maybe while Julie is looking for Section 8.8, I'm just going to go back to Nolene's question and maybe get your opinion. So if it's an annual policy, it will get the old rate, but what happens if it's an annual policy paid monthly?
An annual policy paid monthly, I think Julie will cover it, but my opinion would be that any monthly payments post 1 May 2025 will be at 15.5%.
Thank you.
So consideration includes VAT. So I don't know if Section 8.8 needs to be amended. I don't think it was amended in 2018. It just means that you apply the tax fraction, the new tax fraction, which will be the 15.5 over 115.5.
Thanks.
And I think similarly for 16(3)(c) deductions, that would be the same. You would simply apply the new tax fraction to the deduction that you're going to make.
Thanks, Julie.
So I wanted to spend some time on the transitional rules because they can be a bit nuanced. Is there no? I think you've got some questions, Lolo.
Yes, I think one of the questions was regarding so if Parliament decides that they are not voting in the change, what then happens? So anything that you've purchased post 1 May 2025 at 15.5%, are you then able to go back and get a refund for that 0.5%, or it's just a write-off and we revert back to 15%?
Okay, so the law deals with this, and I'm just going to bring up the section because it's Section 7.4 of the VAT Act, and it says there if the minister makes an announcement in the national budget that the VAT rate specified is to be altered, that alteration will be effective from the date determined by the minister in that announcement and continues to apply for a period of 12 months from that date, subject to Parliament passing legislation giving effect to that announcement within the 12-month period. So, no, you won't be able to get a refund because I think this prevails. If it's not passed in Parliament, the VAT rate will simply revert to 15%, but it will not have retrospective effect. So, because this section will prevail, and it will say that for that period of 12 months, the VAT rate was correctly 15.5.
Okay. Which I imagine will be quite a nightmare if people change systems to accommodate the 15.5 and now would have to revert back to 15.
Yeah, and then, I mean, even within a year, we may have to revert to 16.
Yeah.
So, and the other questions, Lolo, should I go through them?
I think maybe you can go through the transitional rules and then, yeah.
So, okay, so we've dealt with that one. So supplies, so we've got this arrears versus advance. That's the way I think of it. Any payment or invoice in May, which is in arrears, will be at the old rate, and in advance will be at the new rate. And then we've been through the proportion. So any suppliers of goods or services that are going to span the transition, a fair and reasonable apportionment must be allocated to the income. And then there's this is the I suppose anti-avoidance rule, so that people can't manipulate at which VAT rate they want to purchase or supply, I suppose. So it says here, goods or services actually performed on or after 1 May, where the time of supply is triggered between 12 March and 30 April, rate-specific rules will also apply. Where the time of supply occurs between 12 March and 30 April. Under this rule, when goods are delivered on or after 22 May, or services are performed on or after 1 May, but the time of supply is triggered between those dates, the new rate of 15.5% will apply, unless there's some exceptions, unless it's normal practice, business practice to invoice in that manner. I don't know if this will apply to anyone. I mean, yeah, to manipulate something for 0.5%, it probably is not going to happen. So those, yeah.
Julie, we've got a question from Janice. It says effective date and date of invoicing can differ. So I assume the key date is the effective date.
So it depends. So for me, the key is when the services are delivered. So if you invoice after 1 May, but the services were delivered in April, the old rate will apply. If you invoice in May for services that were rendered in May, the new rate will apply.
Thanks. And then another question from Shelley Ann. She says, my question pertains to annual policies that were issued or renewed before the rate increase. How will the sums insured be adjusted to account for the VAT increase for the remainder of the policy period?
Sums insured will have to increase because it's a VAT inclusive value. So it will have to increase to accommodate whatever you would need to pay out, which would have to be at the new rate.
And then Krazan, morning, what happens if you receive premium before 1 May for cover period after 1 May?
Will be at the old rate.
And then another question from Mbali. Yeah. Mbali would like to know, why is the increase still being debated yet it's already applicable?
Good question. Yeah, so I mean, I think for us, there's no debate because of that section that I just brought up. I suppose the question is whether it will revert back to 15% or not. We've discussed this section, that's section 7.4 that I brought up, and it's our view that the VAT rate has been implemented. I mean, the increase has been implemented.
I think we can proceed with the Prezo, and then I'll keep shouting more questions.
So I'm just going to go through through your questions, if that's okay.
Yes.
Okay. So I think some of them have already been asked, but let's just go through them. Annual policies incepted prior to the effective date of change. What is the treatment of this policy as annual, but premiums are paid monthly, as well as the commission due to brokers? So again, any premiums in respect of cover prior to the effective date will be at the old rate, and any premiums in respect of cover after the effective date will be at the new rate. The broker commission, again, to me, will depend on when the service was rendered. So I don't know how the brokers invoice, but if the invoice is for services rendered before the effective date, even if it's invoiced in May, should be at the old rate. Does that make sense?
Yes.
How do the brokers invoice?
The brokers invoice us because we have annual policies, so the commissions would be based on the annual cover, annual policy. So then when they pay us for the annual premium, then we pay them the commission that's due to them.
Okay, annual policies incepted after the effective date of change. Well, what is the treatment if the policy is annual, but the premiums are paid monthly as well as the commission? Okay, so that's all 15.5%, because these are annual policies incepted after the effective date.
Yeah. And then there's a question from Suzette. Julie, she'd like to know whether you would be willing to make the document available to them for referencing.
So that's fine. I mean, there's probably a better document, which is the SARS. There's a frequently asked questions and a pocketbook guide, which maybe I can send that rather.
Okay.
This is an interesting one. If a debit order collected prior to effective date bounces and the second attempt is collected, now I'm assuming that the debit order collected, is that for cover for May, or is it for cover for April?
So a policy that incepts before 1 May 2025, let's say it incepts on the 1st of March, and then it's an annual policy but paid monthly. You collect the first premium in the month of March, you collect the second premium in the month of April. When you collect in April, then the insured doesn't have sufficient funds, it bounces back, and then when you attempt to collect again in May, you collect two premiums, the April one and the May one. What VAT percentage will be applicable there?
So on the April one, 15% will apply, and on the May one, 15.5% will apply.
So then that means that we would have to then run two debit orders, one that at 15 and one at 15.5. And then if the insurer chooses to run it still at 15, but we would have to, in the returns, declare 15.5, and it would be for the pocket of the insurer, that half a percentage.
Correct. I mean, there's definitely some people that are going to make decisions. Like I know the banks, so they might debit your admin fee like from the 15th of April to the 15th of May. So that spans. So that admin fee would, in theory, have to be apportioned between 15 and 15.5. And I think they're going to make the decision that they can't do that in the system. So they'll do it at 15 and then do the top up in the VAT return. But there definitely are instances where some of these transitional rules just can't be applied practically. So then the other one is midterm adjustments, variations of cover after the date, but the policy incepted prior to that. Yeah, that will all be the new rate, 15.5%. Normally your contracts or the law allows you to collect the increased price. It's regardless of the fact that you entered into a contract prior to the effective date, legally you're entitled to collect the increased VAT.
And then there's a question from Nolene. So if a broker invoices before the renewal date and the underwriter issues a policy from 1 May, there would be a mismatch between the broker invoice and the policy schedule. Is that correct?
So the broker is going to invoice
the insured before the renewal date, but then the underwriter only issues the policy on the 1st of May.
The broker will invoice at the old rate. Oh, I see what you're saying. And
Yes.
as an agent.
Yes.
Yeah, there will be a mismatch because the premiums are only going to be collected after 1 May.
1 May, yes.
Yeah, then the broker would have to amend their schedule to make it at the new rate. Does that make sense?
Yes. And then there's a question here from Gail Bosch. If I recall the 2018 system change nightmare correctly, annual policies and annual paid monthly policies would only attract the new rate at the renewal date because the contract was agreed prior to the increase, regardless of payment frequency. However, for true monthly policies, the rate increased with effect from the month the increase applies. Would it be the same this time around?
That's not my understanding. So she's saying an annual policy with monthly payments.
Yes.
The VAT rate increase would only kick in at the renewal date.
Yes, that's what she's saying. And
Mm,
because
yeah.
I think with this one, Julie, my view is that you'll find that some companies will have elected to keep it at the old rate just for convenience sake, and also maybe because the systems are not yet set up, and only then effect the 15 or the new rate at renewal, and then but declaring the correct amounts on the returns and the shortfall being for the company's pocket.
I mean, that's a possibility. But yeah, from a legal perspective, the premium that's collected in May, for cover in May, would have to be at the new rate and so on.
Okay, thanks. And then Natalie is asking, since this is a notional VAT increase, do we still need to send out 31 days notice to the clients advising them of the SI increase and premium increase on monthly policies?
There's an SI increase?
Ooh, I don't know what an SI increase is. But I suppose that the gist of the question is that will they need to send out a 31-day notice to the client advising them on the premium increase?
I don't know if that's really a VAT question. It might be regulated in terms of something else. But we have certainly said that you should advise your customers.
Mm.
Sometimes your contract will say plus VAT at the standard rate, which helps you because then you haven't specified it's at 15%. So the standard rate is going to be 15.5% from 1 May. So maybe it's also just a good thing to look at your contracts and say, does it stipulate the VAT rate or does it refer to the standard rate?
And then another question from Rekotso. She's would like to know what happens if an April renewal is concluded after 1 May due to delays, but cover was held by the insurer in April. Will the April premium be at the old rate or new rate?
So the April premium should be at the old rate.
At the old rate, agreed, yeah.
So again, I mean, probably shouldn't say that, but if you do get it wrong for a month here and there, I mean, it's 0.5%. It's not going to be, the transitional rules are only going to affect you for a month. And if you do get 1 or 2 wrong, it's not the end of the world, I don't think.
And then a question from Besta, just to confirm, the VAT is applicable to the date the service is delivered. So the rule of thumb should be when the cover is provided, right, regardless of when the invoice is raised. If cover incepts 1 May, then the VAT will be charged at 15.5, regardless of whether the policy schedule or invoice is raised in the system. Is this correct?
Do you agree?
Yes. Okay.
I mean, insurance is also, remember, it's not really invoice based. You're only covered to the extent that you've paid your premium. So the time of supply for that purposes for insurance is payment.
And then there's clarity from Danny Joffe, who is our head of legal. Insurance regulations such as PPR and policy wordings state you have to give 31 days notice of any increase in the premiums. This would be considered an increase if you don't absorb the VAT increase. So Danny is confirming that the 31-day notice would have to be issued for any increases.
Yeah, there's a lot of people that won't be neutral, so it will be a genuine increase for them. So claims, yeah.
Sorry, before you move to claims, there's another question where a client pays an annual premium for a policy period 1 April 2025 to 31 March 2026. Does the old rate apply despite the increased VAT rate implemented during the period of insurance?
So would payment have been made upfront?
They don't state whether the payment was made upfront, but let's assume that it was made upfront. If payment was made on the 1st of April 2025, and then cover date ends the 31st of March 2026.
So then an apportionment should be made. So 1 month should be at the old rate, and then 11 months at the new rate.
So even if the full premium is paid upfront on the 1st of April, and it's not paid monthly.
I think so. I think that's right, yeah. I'm just looking at my notes. I think that's, do you not agree, Lolo?
Because time of supply is the earlier of invoice and payment, I would believe that payment took place on the 1st of April, which is the time of supply, and therefore the 15% should apply.
Yeah.
And then if we can,
I think that's right. I think that's right. You're right. But it must be customary to pay upfront. Otherwise that anti-avoidance rule will kick in.
Oh, okay. And can you then take us quickly through the anti-avoidance rule?
That anti-avoidance rule. So it's basically saying, okay, so where goods or services are performed on or after 1 May, after the effective date, the time of supply is triggered between 12 March and 30 April. So maybe this is a good example, right? Because in this example that we've just discussed, we're going to have the time of supply will have been triggered between these two dates, right?
Mm-hmm.
Okay, but it actually won't apply. So it's basically saying that the new rate will apply if the time of supply is triggered between these two dates.
Between
so, for example,
okay.
Yeah.
So if the time of supply is triggered between the 12th of March, which was when the announcement was made, and the 30th of April, then the new percentage will apply.
That's correct, unless it's customary for the time of supply to have been triggered in that manner.
Okay. I think we can continue, Julie. I'm just trying to go back to the question regarding the SI, because we did get clarity that SI means sums insured. So if you so it's the question was from Natalie. It was referring to, since this is a national VAT increase, do we still need to send out the 31 days notice to the clients advising them of the sum insured increase and premium increase on monthly policies? So Danny did cover it from saying that the 31%, the 31 days notice needs to be, will be applicable. I just wanted to go back to just notify you that SI is sum insured.
So claims reported prior to the effective date, but not yet finalized by the time, but only finalized after the effective date.
Yes.
So the claim will only actually be paid after the effective date.
Yeah, so let's say on the 31st of March, a claim was reported to the insured, and the claim is still in the process of being negotiated, and only post 1 May, the claim actually gets paid and finalized.
So the new rate will apply to claims. So that's the 16(3)(c) deduction. And similarly, on the other end, the 8.8 declaration will also be at the new rate.
And then Jenna Lee says, would we need to send policies with new increases to clients prior to the end of this month to provide for the 31-day notice? My answer to that, Jenna, would be yes, in order for you to be compliant with the 31 days notice. And then there's another question from Natasha. She says, in terms of sums insured, is this the right platform to ask if the sums insured on property, for instance, will automatically be increased by the 0.5%? Will a current sum insured of, say, 100,000 automatically be adjusted to increase the value by 0.5 to 100,500? Or will the 100,000 be assumed to be VAT inclusive?
So the 100,000, if it was a summed insured prior to the effective date, should be VAT inclusive, right?
Yes.
We all agree that that should be VAT inclusive.
Yes.
So the sums insured must increase to account for the additional 0.5%. So maybe an easier example to have is if your property value was 115,000, which is VAT inclusive, as the sum insured, it now needs to be 115,500. Does that make sense?
Yes, thank you. I think we've covered all the questions. I don't know if there's anything else you'd like to touch on, Julie.
No, I can't think of anything else. I think if there were other questions that we needed to firm up on, I'm happy to have them emailed, especially on these annual ones. Just to get the correct answer in writing. But other than that, I don't have anything else.
All righty. I don't see any other questions. Tove?
Thank you, guys. Lola, there is one last question on claims from Anonymous. Anonymous, please do give us your name and surname for CPD purposes. Hi, guys. Do claims on seasonal policies work the same as just explained in terms of date reported and date finalized?
I believe so. So I think my understanding is that all claims that are going to be paid out after the effective date will be at the new rate. And the same for the 8.8 declaration. I mean, my understanding is that, if you had to go and replace your car and you only got paid out after the effective date, you would have to go and purchase a car that will be sold at the new rate. So the two would match. I don't know what he meant by seasonal claims. I don't know. Is that something different? Seasonal.
Yeah, maybe if you could just expand on that for us, Anonymous, and then we'll get that through to you. And just for everybody else who's, yeah.
Sorry, there's a question from Deloitte. I don't know if Danny is still on the line, and maybe he can type it on the Q&A, the answer. The question says, in 2018 frequently asked questions, SARS confirmed that policy schedules need not be reissued to reflect at 15%. However, it is important that the policy schedule specifies which VAT rate was applied to the premium reflected, and that insurers notify affected policies. In this regard, a public announcement was made by the industry during March 2018 to ensure that this condition is met. Therefore, the same rule should apply that we policy schedules need to be reissued, even though we need to give 31 days notice in change premium, i.e. letter must be sent, but schedules do not have to be sent.
That sounds right. I mean, it's again, the 31 days is in terms of some other regulation, but again, yeah, I mean, that's why I said I think it's important for you to look at your contracts to see if it stipulates the standard rate or 15%. But yeah, that sounds right.
And Julie, maybe while Danny is typing in the chat an answer to that, Natasha says she's sorry she wasn't clear on that question. She's asking if the plan is that insurers will automatically increase the sum insured, or does the client have to do so?
Yeah, I mean, that's also maybe not a VAT question. Maybe more of a insurance law question.
Correct. Yeah.
It certainly would put the insurers out of pocket if they don't increase. I don't know whose responsibility it is.
And then a question from Rosemary, will insurers increase the premium midterm to cover for the increased sum insured? I guess that would be, so I guess that would be what the decision of each insurer, would it?
If I can maybe jump in.
Yeah.
To answer that question. So we don't account when we price the premium, we've already included VAT in. So a midterm increase just to account for the rate increase in VAT is not something that would happen. The only reason you'd have a midterm increase is if you get a higher limit.
Okay. Thanks, Soho. And then Leandy says, well, what will happen if you pay a claim on the 30th of April, but the client can only buy a new car in May?
It's a very good question. Yeah. Yeah, I mean, there's a mismatch. I don't know what to say. There will be a mismatch.
Yeah.
They would have
Because
to.
the claim would have been paid at 15%, but then
Yeah,
the new
they would have
purchase
to,
would be at 15.5.
Yeah, they'd have to ask the car dealer to invoice them in April. Yeah, I mean, there maybe have to be some cognizance to if this kind of thing would happen. But yeah, there would be a mismatch then because the dealer's time of supply would be on invoice.
Yeah, there's a comment from Keith, and Keith says that average would apply if the sums insured are not sufficient at claim stage, including VAT.
And then a comment from Danny says the policy wording is also important. SARS cannot comment on that, meaning the policy wording. Saia will also give clarity shortly.
Is that the South African Institute for Insurance also?
Yes.
Okay.
And then there's a comment from Knowles. She says phase regulations play a huge role in this matter, and I'm sure the FIA will still issue guidance on this matter in order to get all insurers and intermediaries on the same page. Yeah, and I agree with that, Knowles. And we thought that, having this conversation as a starter, and then as and when clarity on some of these things come up, we have a bit of background as a starter to some of these questions. I can't pick up any questions. I don't know if Tove and Tseho, you guys can pick up any more questions.
Nothing after what you've just spoken about on the phase regulations, but I did have a question for you, Julie, and I'm using my privilege of having a camera and a microphone. We discussed about what happens where the sum insured, how it's affected by VAT. So specifically for our policies, our limits of indemnity in on the schedule of VAT exclusive. So does the rate have anything or any impact on the sum insured noted on the schedule when that is VAT X?
So I would have thought your sum insured must be inclusive. So I don't know why would it be stated as an exclusive value?
So usually the sum insured wouldn't be 115 million, it would be 100 million.
Hmm.
So that's the amount we have decided to make good on, should there be a full loss. And when we load it on our system, we do load it with VAT, but the actual sum insured does not account for that. Does that make sense?
I think it does. It's like your base doesn't change, right? So
Mm.
in other words, if you had to pay out, you would pay out 115 million, but you would claim it back. You'd claim 15 million back.
So we quote the client 100 mil, and that's the max that we will pay out, minus the deductible. But on our system behind the scenes to account for our regulatory requirements for VAT, we do load it on our system VAT inclusive, just so that our systems speak together. But the actual sum insured is what's on the schedule. So if there's a full limit loss, we will pay 100 mil less the deductible. So because the limit is VAT X, does the VAT rate change have any effect on that?
When you pay out 100 mil, you're still going to get your 16.3C deduction. So your total cost will be 100 less whatever you're going to deduct for VAT. So your sum insured actually is inclusive either way. If you get what I mean, because if you've just said to them, look, I'm only going to insure you for 100 million, when you pay out that 100 million, you're still going to get a 16.3C deduction, which means your cost will be 88 million or whatever it is. So it is
Very
a VAT inclusive
interesting.
value. Yeah.
Yeah, so when you look at our schedules, we do say limits of VAT exclusive, but you've given me something to think about. If you wouldn't mind me dropping you a mail so we can figure it out together, that'd be lovely.
That's fine because, that's fine because your total cost will be the 88 million. It won't be 100 million.
Yeah. Okay, cool. Guys, if
sorry, it's just
Yeah.
an interesting statement that I also came across. It says that permission is hereby given under proviso 3 in this section 65 of the VAT Act for a vendor to display a notice to inform customers that the price does not include VAT at the new rate and price will be adjusted at the point of purchase, that is at the till. So you'll find that perhaps when you are doing some of your shopping and then you see that the VAT is only at 15%, but then they can be a notice that will let you know that when you get to the till, 15.5 will actually apply. And then it also says this notice should be removed by no later than August 2025. So it was an interesting note that I came across.
It sheds some light on how the transitional period is going to work in terms of trying to maintain compliance and stuff like that. So it is very interesting.
Yeah.
Guys, do we have any more questions?
Let me see. It's just
The last one I see is from Keith Bester.
Yeah, I don't think we've got.
I see there's something from Nell. It says a rate is not vatable. So I'm not sure what he means by a rate is not vatable. Maybe if he can expand on that. If it is a question or if it's just a statement. Okay, I think if Nell does not provide clarity, we can close the session. Thanks, Tsogo.
All right, guys, thank you so much for joining us today in another iTOOsday. Julie, thank you so much for your insights, and the format of your presentation is something I liked, the interactive element. Lolo, thank you for being part of the session and helping guide us through Julie's genius. Guys, thank you so much. That closes off another iTOOsday, and we'll see you guys next week.
Thanks, Tsogo. Thanks, Julie.
Thank you.
Cheers.
Thanks. Bye.